All right, welcome. Today we're going to do something a little different. We are putting a single stock, Intel, right under the microscope to give it a full technical health check. Think of it like a doctor's visit, but for a stock. Okay, let's get into it.
So that begs the question, right? When an analyst looks at a stock chart, how do they actually decide if it's healthy and strong or if it's sick and weak? What are the signs they're looking for?
Well, it's a lot like a doctor's visit. They run a whole battery of technical tests, kind of like blood work and checking your vitals. And today, we've got the lab results. We're going to walk through a technical report on Intel and see exactly what those tests are telling us.
Now, when you go for a checkup, the doctor usually gives you the most important finding first, the overall diagnosis. So that's exactly where we're going to start.
The report kicks things off with one single comprehensive number, the technical score. Out of 100, Intel gets a 33.28. Oof! In our health analogy, that's like getting a pretty worrying wellness score from your doctor. It tells you right away that something's not quite right.
And that low score leads to this very clear, one-word diagnosis: bearish. This is the big takeaway. According to this technical report, Intel's health is poor. The rest of this breakdown is going to be about exactly why it got that diagnosis, test by test.
First up, let's check the patient's vitals. For a stock, the most basic vital sign is its prevailing trend, and we measure that using something called moving averages.
So what in the world are moving averages? The easiest way to think of them is as the stock's normal baseline health, like its regular temperature or its resting heart rate over different periods. A really healthy, strong stock will consistently trade above those baselines. An unhealthy one, well, it falls below them. And this table just lays the problem out perfectly. Look at this. Intel's current price is below every single key baseline: the short-term 20-day, the medium-term 50-day, and even the super important long-term 200-day average. It's like a patient showing up with a low temperature, low blood pressure, and a low heart rate all at the same time. Every vital sign is flashing a warning. Okay, so we've seen the underlying vitals are weak. Now let's look at the immediate pressure the stock is under. And we do that by looking at its support and resistance levels. Think of this like a house with multiple floors. The price used to be on the floor at $21.21, but then it fell right through it. So now that old floor has become the new ceiling and it's trapping the price below. The stock is literally stuck on a lower level, and the next potential floor or support is all the way down at $20.62. And check out this direct quote from the report. It says the price is hugging the lower Bollinger Band. So what does that mean? Well, Bollinger Bands are like a channel the price usually stays inside. When it's hugging the bottom of that channel, it's a huge sign of intense, active selling pressure. The stock isn't just weak, it's being actively pushed down.
Okay, time to move on to the lab results. We've looked at the vitals, we've seen the immediate pressure. Now we're digging into the deeper diagnostics that measure the patient's energy and strength. In stock terms, that's momentum and volume. This first test, the Aroon indicator, measures the strength of the uptrend versus the downtrend. And wow, look at this chart. It's a totally one-sided story. The downward trend strength is a massive 78.57, while the upward trend is barely even registering at just over 7. It's pretty clear all the energy is flowing in one direction, down.
Next up are a couple of classic momentum indicators. You can think of these as being like a cardiac stress test for the stock. They're designed to measure the speed and intensity of the price moves to see if there's any strength left for a recovery or if it's just getting exhausted.
And the results are in. As you can see, the Relative Strength Index, or RSI, is at 36, which is deep in bearish territory. The report even notes it's approaching oversold. Then you look at the CCI, and it's already there, with a reading below -100. Oversold is just a technical way of saying a stock has been under heavy, relentless selling pressure for a while. This patient is clearly tired out.
So, to round out the lab work, we've got a few other tests that just confirm everything. Another popular tool, the MACD, is giving a clear sell signal. But here's what's really telling. The volume is low. This means not only is the price falling, but there's a serious lack of energy or conviction from buyers to step in and stop the slide. So far, literally every test has pointed to a bearish condition. So for our final step in this health check, let's just zoom all the way out and look at the patient's long-term history over the last year to get the full picture. At its healthiest point in the last 52 weeks, Intel is trading all the way up here at $51.28. That was its peak performance. And at its weakest point, its sickest day over the past year, the stock fell all the way down to $18.51. That was the absolute bottom of its trading range.
And this slide right here, this puts everything into perspective. The current price is down almost 60% from its yearly high, but it's only about 7% above its yearly low. This gives us that crucial context. The stock isn't just having a bad week, it's trading near the absolute bottom of its entire 52-week health range.
So what's our final takeaway from this whole health check? It's that every single test we've looked at, from the short-term vitals and the momentum labs to the long-term history, they all point in the exact same direction. The diagnosis of a consistently bearish condition is confirmed across the board.
And that leaves us with a final fascinating question to think about. When a stock's technical health looks this poor, with every single indicator telling the same negative story, what kind of event, a huge earnings surprise, a massive industry shift, what would have to happen to be powerful enough to completely flip the diagnosis and change the entire narrative?